Today's US jobs report was much stronger than expected, and we saw the US dollar rally across the board. That put pressure on the price of gold and kept indices under a bit of pressure as bond yields came back. Now, heading into the weekend, we've got the weekend risk, obviously, where the US and Iran might agree to some form of a deal, which appears unlikely at the moment, but it is nevertheless a risk, so keep a close eye on that. But looking at the economic calendar, just once again, we've had a much stronger than expected jobs data with the headline print of 172,000 against expectations of 85,000, and the previous number was also revised higher. So very strong set of numbers from the US employment sector. And heading into the week ahead, we've got inflation data coming up on Wednesday, with US CPI seen rising to 4.2% compared to 3.8% the month before. Any read above 4.2% will surely keep the US dollar supported, whereas if we get a much weaker reading than 4.2, then that could put some downward pressure on the US dollar. Meanwhile, we have the ECB rate decision as well to look forward to next week. The ECB is highly likely to hike interest rates. This is going to be an insurance hike, one that will hopefully help to prevent inflation from spiraling out of control here in Europe. But the key point will be whether the ECB will follow that with another rate hike. And that's the signals that the markets will be watching next week when the ECB president speaks at the press conference. So a couple of important macro events next week. We do have the Bank of Canada as well. But going back to the Fed and looking at the CME's Fed Watch tool, you can see that by December, a rate hike is now fully priced in, with the probability of rates remaining at the current rate falling further. So this is the situation now. As pressure rises on the Fed to hike interest rates, this is applying downward pressure on things like gold. The precious metal has been falling for the last 3 months, has been losing bullish momentum, and recent trade has been bearish with price action looking heavy. A few days ago, or several days ago now, gold tried to break through the bearish trend line. It spiked to the 4,580 level, where it had previously encountered some resistance. It got rejected there. And since then, every recovery attempt has offered fresh selling opportunity, as you can tell by the wicks of these candles. Now, gold is finding itself at major support around that 4,400 area, where we also have the 200-day moving average converging with price support. Speaking of the 200-day moving average, it's going to be very important what gold does here, because obviously the 200-day has offered support in the previous times when it tested it. But it's been a while since gold broke below the 200-day. As I move back in time, you can see that every time it tested the 200-day, it got really nice moves on the upside when the bullish trend was very strong. Now it's weakening, and if we get a breakdown below the 200-day moving average, we could see something similar to what happened back in 2023, September of 2023. That's the last time gold broke below the 200-day moving average, and that led to a bit of a sell-off. And from around the breakdown area, gold fell about 5 or 6% before bottoming. Could we see a similar move this time? The euro dollar is breaking below the trend line that has been in place for a while, and following a lengthy consolidation around this area, we've had a stronger than expected jobs report today, and that's kind of triggered the selling pressure ahead of the weekend. Now, speaking about the weekend, we've got the weekend risk obviously to take into account, but from a purely technical point of view, this breakdown, if it can close below it, could be significant. It could lead to the euro dollar falling to around 115 handle, where we had seen a strong rally from previously. Below that, we have the March low coming in at around 114.10 area. On the upside, key resistance is right here at around 116.70 to around 117 handle, where we have the 200-day moving average converging with these trend lines as well. A potential US-Iran deal could send the euro dollar back above that zone. especially if we also have a weaker than expected inflation print from the US next week. But without a deal, I can't see the euro dollar moving above that zone as things stand. The dollar CAD has been printing bullish price action, and although we did have a stronger than expected employment report from Canada, the US jobs report was equally as strong, and as a result of that, we didn't see any major downward move in the dollar CAD. Instead, it found support right where it needed to at around this zone where previously it had found resistance and support from, and it's bouncing back, as you can see by the wick of the candle. So long as this area now holds as support, I expect the dollar CAD to potentially head above the high of this candle here at around 139.67, which happens to be just below the 140 psychologically important level. Therefore, I expect the dollar CAD to potentially head to 140 in the coming days, given a backdrop of a strong US dollar and elevated oil prices. Thanks for watching. Don't forget to like this video and subscribe to our YouTube channel. I'll see you in the next update. Take care.